All right, I'm sure everyone has heard of the term golden parachute, typically referring when executives leave companies and they get great severance packages and stocks and bonuses and things like that to move on. Well, in the housing market, we have something now called golden handcuffs. That's means homeowners are literally handcuffed to their property because of the low interest rates with their mortgage and they're not moving anywhere else and therefore stalling and slowing down the housing market. So, welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Randy here, putting the realism back in real estate. Hope you're doing well. Today is the 18th of May. The month is just coming along pretty quick. By the way, guys, I've got the top 10 ways how to earn income and build wealth in the housing correction and crisis. Lots to look at and read here. Screenshot that. Give me a shout if you want to talk about this program. It's very interesting, and everything I talk about here, we do in real life. So this article came up, the other day here. I was looking at it yesterday, and you know what? It's not much of an article. It talks about potential existing home sales. They're trying to determine what the opportunities are going to be. But what really sort of caught my eye was some commentary, which I thought was interesting. So essentially, homeowners are staying put. They're not selling their property. We have low inventory. It's affordability crisis. It all kind of works together. But they talked about the golden handcuffs of low mortgage rates. I thought this was really interesting because existing homeowners are hesitant to sell their homes because mortgage rates are well above 6%. Now, we know mortgage rates have been fluctuating between 6 and over 7 here and there. So yeah, we're going to have weeks where we have lower rates, week where we have higher rates, but in the end, it's still sticker or rate shock compared to where they're at now. 83% of existing homeowners have mortgages with rates below 5%. Why would anyone sell their home when it will cost significantly more each month to borrow the same amount from the bank? So that's kind of true. So here you are, you got a home, you got some equity, you want to sell, you need to sell, might be a good opportunity to sell. But if you move and you engage in a new mortgage, suddenly your rate, your rate level jumps dramatically. So, are you actually, realizing that equity or the opportunity, what you make when you sell your house? Who knows? So it's kind of an interesting concept here that people are stuck and they're not selling because of that reason. So it's interesting because they say when your castle becomes your prison, the housing market is unlike most markets. Typically, the seller or supplier makes their decision to add supply to the market independent of the buyer or source of demand and the decision to buy. Yet in the housing market, the seller and buyer in many cases the same, the existing homeowner. So to buy a new home, you must sell the home you currently live in, right, and already own, and then find one to buy. So it's not just any home, but one you actually like better. So the concept here is that if I'm going to sell my home, I want to sell it at the right time. I want to cash out for as much as possible. I want to find something that I like better or suits my needs better. And you know what? With lower inventory, there's fewer homes to choose from, which keeps me in the proverbial your home becomes your prison. So you're handcuffed to your interest rate, and your home now becomes your prison. So what really happens? Nothing. The market stalls, and you're kind of stuck here. So sellers face a prisoner's dilemma, a situation in which individuals don't cooperate with each other, even though it seems in your best interest to do so. But yes, you're buying, someone's selling, or vice versa. You're wanting to maximize your position, right? If potential sellers all choose to sell, they would all benefit as buyers because they would increase the inventory of homes available and alleviate the supply shortage. However, the risk of selling if others don't in a market with a shortage of inventory prevents many existing homeowners from selling altogether. So correct. If you don't see the inventory, don't see what you like, you're not going to jump and sell your home that you actually live in. Now, this is interesting though. What about the boomers? So there's been many articles written over the past number of years about the pending level of housing inventory that's supposed to come. All right. And this is really resulting of the baby boomers. And the concept is being that baby boomers are, they're now retiring or they're starting to age out and they're going to be in positions where they'd like to sell and downsize. So they've got money or equity tied up in their larger homes and the opportunities that we can sell. And guess what? We can fund our retirement or our lifestyle with the equity in our home. Well, that projection was really 2022 to 2023 starting and moving forward to about 2030, where we're going to see, predicted a significant amount of properties that would be in the position to be sold by the boomer generation. Well, they're going to be stuck in the same situation here, right? Why would you cash out your equity when that equity is going to be transferred to purchase a property that's already much more expensive than anticipated. So this is yet one more thing or one more issue that will sort of clamp down on the real estate market and prevent more inventory from coming aboard. So it's something to think about. But again, if you start looking at some of the stats and some of the volume, they say there's a ton of houses available in this, we'll call it, population segment. It's just a matter of when people want to make the move. So it's one of those things here. You can't go from high equity to high equity, and you're not going to go from low rate to high rate. So it's one of those things where something's got to give in the marketplace to get the market stimulated, to get people to sell. It's got to be a number of factors, right? It's got to be more inventory, it's got to be some lower interest rates, and it's got to be some more people rolling the dice and taking a risk to put their home on the market for sale, all right? And just to sort of tie in with what we're saying, the mortgage market fluctuates on a weekly basis, right? So the Mortgage Bankers Association, they put out a weekly, and you can look this up, we're not going to get into it, but my point though is that every week they put out information saying, here's the purchase applications. Was it down from the week before? Is it down or more from the year over year? Here's the refinance applications. The same thing. Is it up or down from the week before? What's the comparative going from this time last year? So clearly, this segment of the industry is very, very rate sensitive because the rates are higher. And a small change in rates could result in a few $100s more on your monthly payment. So people are being very careful with what they do. So again, just realize that you can look this stuff up. It's published every week. But my point is that this tells you what the public is doing with respect to applications to refi or purchase. And when they're down, well, that's going to affect pending home sales, which are contracts for the future, and eventually will affect closings, which will affect the whole market in itself. So that's kind of where we're at with respect to the application process here. Now, everybody, if you enjoy the information I provide, if you'd help my channel grow and hit the subscribe button, I'd really appreciate that. And of course, as I say this every video, if you are already a subscriber, if you can hit the subscribe button again, turn the bell notifications on, because guess what? My channel always loses subscribers every week. I just maintain. Don't know why, I just always maintain. So thank you very much. Appreciate all the views, everybody. All right, moving on here. Guess what? Today, NAR, National Association of Realtors, released their existing home sales report, and this would be for the month of April. So unlike the Case-Shiller report, which usually is a 2-month lag time, NAR, National Association of Realtors, is only a month behind here. The key highlights of the report, and we'll show the screens in a second here. Existing home sales receded 3.4% in April. So a seasonally adjusted SAR annual rate of 4.28 million properties being moved for the year. Sales fell 23.2% from a year ago. Median existing home sales price slipped 1.7% from a year ago to $388,800. And basically, the inventory of unsold existing homes increased to 7.2%, which represents a little over 1 million homes for sale and the equivalent of 2 months supply at the current monthly sales pace. I'll talk about that more in a second when we hit that slide. That's the overview. So guess what? When we take a look at, NAR puts out their slides, and we'll take a look at that right now, obviously. So you can see that, towards the right, that's the most recent month. It's April 2023. That the pace of sales brings us about, if we annualize that, about just under 4.3 million units being sold for 2023. We can see that, it peaked at 6.56 back in 20, looks like back in 20, sort of summertime, end of summer in 2020, which was, when COVID was in play. People were finally coming out and looking to buy. There was the big push for homes, second homes, vacation homes, relocation, moving to more subdivision or rural areas, the whole bit. So we saw a huge surge in sales, and now we've dropped, over, a count of over 2 million on the SAR number here, which is quite interesting where we are today. Median price of existing home sales. So you can see that it was, it hit its peak at 413,000 back in 2022. We're down to 388.8 right now. So we're seeing some erosion overall, which is interesting. Existing home sales median price percent change year over year. So obviously, if you go back to 2022, we were seeing double-digit, we'll call it median price increases. Well, that's the appreciation or the increase on a monthly year. The increase per month on a year-over-year basis is actually decreasing or depreciating now. It's a lot to say and a lot to put into one segment there. So you can see how 15.1 was the high year-over-year on the median price, and we've slowly eroded to basically in February having no increase, and then March and April we've gone the other way. So now our median price points are decreasing. That coincides with where the market's headed. The slowdown, sellers have to be more competitive. We see from the Case-Shiller reports I talk about every month that a lot of locations across the country now are losing value, comparatively speaking. A lot of them, especially West Coast areas, are losing at a double-digit price or pace right now. So it's starting to happen, but now we can see 2 months, 0, 3 months ago 0, 2 months ago, a 1%, now a 1.7% last month. So we're seeing this sort of slowdown, and it's gone below the 0. It's going down the other way right now, which is kind of interesting. Total existing home sales. So yes, we can see that every month the year-over-year comparison of the number of units sold is not good. So we're not selling as much the previous year. Clearly, we could see looks like earlier and end of the year from last year and earlier this year, big time sales slowdown. With higher interest rates, we see a little bit of a rebound there, but we're still over 20% less than the year before. So please keep that in mind. Realtors Confidence Index survey. Well, first-time home buyers were up slightly last month. Sales to investors were about the same. Cash sales, up a little bit year over year. Distressed sales, which distressed sales are bank-owned, REO, real estate-owned, foreclosed homes that are on or in the MLS, and any short sales. That was the same at 1% of the overall marketplace. Days on market, we see that the days on market is how many days active in the MLS before it goes under contract and it's turned to pending. So we see it's about 5 days. So a slight increase on days on market. That makes sense. As the market slows, as price points decrease, as sales volume slows, we're going to see days on market increasing. And that's just the way it goes. It just points to a general slowdown right now. The interesting thing, though, is that we're now entering what we would call the spring summer selling season. So, people are already talking about, well, maybe the housing market's bottomed out. Maybe this is it. We'll see growth from here on out. I don't know. I don't think so, because a lot of the stuff we talk about in the market doesn't include the distressed properties, which really are not at the volume yet to make an impact. And we don't talk about those because that's, I guess, a no-no in the mainstream media as well, too. So just please keep that in mind. So percent change in sales from a year ago by price range. So, of course, NAR breaks down sales by price ranges. So 0 to 100K, 100 to 250, 251 to 500, 500 to 750K, 750 to 1 million, and 1 million and above. Well, we can see that every price segment year over year is much less than the previous year. But you can see that the larger or the more expensive properties, 500 to 750, 750 to 1 million, and over 1 million, that's some significant year-over-year volume transaction decreases. So especially on the higher level now, because if you're spending over $1 million for a property and you're going to get a mortgage that's high 6s or 7%, probably not interesting for someone to do that unless they really have to buy. So things are changing. So that's, we're going to see a different mixture of housing sales and how it all kind of plays out. Now, month's supply. So we mentioned that at the end of April, there's what we call a month's supply of homes for sale. So the April value was 2.9 months worth of inventory out there. Now, what does this really mean? Well, when we talk, real estate is not really, I guess, in sales capacity. It's not talked about in units sold. It's talked about in time to sell the unit. So when we say 2.9 months, what that means is if no new listings came on going forward, it would take roughly 2.9 months for the entire existing inventory to sell based on the speed or the pace of the sales that are currently going on. So we can see that it's dropped a little bit. We were December, January, we'll look at 3.5, 3.4 months worth of inventory, and we've dropped down to about 2.9 now. A little bit of an uptick since March, but we're at 2.9, which is not a heck of a lot. Typically, real estate pundits, gurus, Wall Street people, whatever, analysts, they say that having 6 months worth of real estate inventory, so that month supply, if it was 6 months, is typically a balanced market. You have the right number of buyers, the right number of sellers. The market should be healthy at that point in time. If it's lower, it's a seller's market. If it's higher, it's a buyer's market. and thus the price points will change and fluctuate based on the kind of buyer's market here. So, and just something I want to talk about too, which is kind of interesting. This will kind of bring this all together here. Is that when the housing market increases in value, it attracts a lot of attention. Clearly, so what we have seen is that NAR, National Association of Realtors, the membership to date as of October 2022 was 1.6, just over 1.6 million realtors across the country. All right, we got about almost 1,100 local realtor associations across the country as well too. Now, this is just NAR. Okay, so NAR is National Association of Realtors. So if you're a real estate agent, you can opt to not be part of NAR. But most, well, again, 1.6 million people are part of NAR, right? And there's an annual fee. And if you're part of NAR, NAR has trademarked the term realtor, so you can use that in your branding and your licensing and advertising, whatever you want to do. So there's 1.6 million realtors across the country. However, there are more real estate agents that are not members of NAR. What that number is kind of nebulous, to be quite honest with you, but there's probably a fair number. So let's just say extra 400,000 to be safe. There's probably more. So we got 1.6 million members of NAR. We got about 400,000 minimum, which I think it's actually more than that. Real estate agents that aren't members of NAR, which would give us a minimum of 2 million real estate agents across the country. If we go back to the last, graph there in statistics, when they're saying we got roughly maybe a million and change, 1.04 million units that are available as inventory across the country, we actually have a 2-to-1 ratio, 2-to-1 real estate agents per every listing. So that's not really good. That shows that we got more agents than we have listings, so it's competitive out there. It's difficult for people to make ends meet if that's your sole source of income. So having said that, okay, I wanted to show you something which I just read the other day. Oh, and here's the growth. So this chart goes in because NAR pulls the stats and publishes them. So if we see in year 2000, that's the associations, and then we've got the right-hand column is the number of realtors. We can see how it was growing, 2005, 2006. Once 2006 hit was the peak, basically. After that, you can see that, we started having some issues with respect to the housing market in 2007 and 8. So real estate agents were falling off. It was dropping in 2007, 8, 9, 10 as well. Let's go to the next slide here. All right, next slide will show some more information. Okay, 2011. 2012, so 2012, we actually dropped below 1 million realtors. And if we refer to some of the Case-Shiller information, the Case-Shiller, when they do their historical analysis, 2006 was the peak, 2012 was the trough in the last housing crisis. So it shows that the lowest point of realtors in about, 20 years, over 20 years, was basically at that trough in 2012. Well, slowly it started to pick up. So we're about 1.6 million realtors now, probably 2 million plus real estate agents across the country, if not more, when we add in the ones that aren't part of NAR. I'm going to show you something here. I put this so I wouldn't forget. So, real estate agents, we get stuff in the mail all the time from our associations, from NAR and whatever. So this basically is Tampa Realtor Magazine, and it comes out every 2 months, I believe. So just for fun, I'm like, well, let's check out. So what they do is they publish all the new real estate agents that joined the association here. We're Greater Tampa Association, and they publish them. So this is what it looks like. I've got pages, of new, basically, names of newly licensed people. Well, in our own real estate association here, for the first quarter of 2023, we added about 1,000 real estate agents to the association here. So, it's interesting that, so what does that mean? Well, it means that, again, we have 2 agents for every listing, which doesn't make sense. It's very disproportionate. People are still coming on because there's still that narrative, or still the belief is that, there's big money in real estate and things are okay and things are going good. So people want to join and want to get involved in the real estate market, especially from a real estate agent perspective, because they think it's still hot and it's still growing, et cetera, et cetera. So, what we're foreseeing in the future is that as the market slides, that peak of 1.6 and the other real estate agents, and that's going to start to slide as well too. But I just thought it was interesting to note that, for the first quarter in our association here where I live locally, almost 1,000 people joined, which is unheard of. And that's just one association. There's a whole bunch across the state, and every other state, has their associations as well too. So that's what's going on in my neck of the woods, which is kind of surprising. So, but that's going to change very, very shortly here, guys. So anyway, I've talked about this a few times: 10 ways to earn income and build wealth during the housing correction crisis. Give me a shout if you want more information about this. This is my new program. It's going to be sort of an ongoing program where we're going to talk about. We're going to have a couple calls a month. We're going to have case studies. We're going to have online training. I'm going to do a lot of cool stuff behind the scenes with this program here. We're going to go through all those, we'll call it techniques or niches in the housing market, plus more. But this really are the top ways that you can actually acquire your primary, acquire rental home income, earn, build wealth, etc. There's many ways you can do it. There's the top ways. We're involved in pretty much all of them in some capacity or other. So anyway, just want to bring that to your attention. So here you go, guys. I appreciate the views, likes, and comments. Please share the video with your family and friends. If you're not a subscriber, please subscribe. We'll look forward to speaking with you probably early next week. Take care.